Good day, everyone. Well, as we see, the markets have hit all-time highs across the board. And so far, things look pretty sanguine out there, despite the troubles in Greece. The general U.S. market seems to shrug off these issues with only a minute amount of weakness displayed intraday when bad news out of Greece comes forth. Essentially, this market looks like it is wanting to start on a new uptrend, but it has been more or less in a sloppy sideways motion for many months. So I would not make any assumptions at this juncture. It's not surprising if the market wants to come in a couple percent, 2 or 3%. It tends to do that rhythmically. So I would not get overconfident. In general, that's a poison pill, but certainly not overconfident in this situation where you just see that there's still a lot of noise in these patterns, and it's just far better to do what's worked, and that is to take profits when you have them in context with the chart, and to also keep your stops tight, because as we all know, leading stocks can give up their profits in a couple days, profits that might have taken that leading stock 1 or 2 weeks to gain from. So keep your stops tight, keep your eye on the ball. I did want to go over a couple stocks here that we've put on our actionable list. First, we've got the one you're seeing right there, CMCM. This has, we had a pocket pivot on this one on this day here. As it looked like it was trying to break out, but it is kind of a sloppy pattern, so it's pulled back in to its base and then issued another pocket pivot yesterday, but it closed in the lower half of its range, almost break even. Today it's still having some trouble despite the market being up. So all that's to say, if you own this one, make sure you keep your eye on the ball on this, because it could retest the lows of its base. That would mean giving up another 6%, and I don't think you want to do that. So keep your stops real tight on this one, but also know it's a tricky one because it is a bit sloppy in the pattern. So it could hit your stop and then go higher. I do think that given the fundamentals and the nature of the company, it looks like it does want to break out of this pattern, but I think it needs to get a little more constructive. So that might take a few more days for it to accomplish that, if it's going to do so at all. We have another stock, AMBA. We've talked about this one quite a bit. I just wanted to rehash quickly that here's a stock that we talked about, sent email out to users, members, because it was getting very frothy up here. And then you have the second day off the top on the highest volume in months. So that's your clear sell signal. I mean, it's nice that this climax top gave you that kind of exit. It's a very clean exit. A lot of climax tops are very volatile at the top, so you might miss a few points. But in this case, it was very clean. And then, of course, the next day, it mini gaps down at the open. And so if you didn't sell at the open, then that's a learning experience for you as a trader to have your stops much tighter and much more disciplined. And God forbid if any of you still own this stock and you're hoping for a prayer that it's going to go back to new highs, I wouldn't. And simply because it is giving you a second chance exit here. Oftentimes these stocks, when they collapse like this, they will bounce. And this is bouncing, but get out of the stock. I mean, if it's going to set up again in the ensuing weeks, then it will issue most likely a pocket pivot of some sort or viable gap up. So you don't want to have your money in this one at this time. Then we've got an old friend, SKX. This one has done us very well in terms of the actionable buy point and the cleanliness of the run. As we say, take profits when you have them. But as you can see, this stock has not done anything wrong up until recently. I mean, you could have taken profits on this day here, because it is seemingly getting ahead of itself, or even here. But then it issues another pocket pivot because it's still in play. You got a pocket pivot, say, on this day right here. So if you sold it out here, you could have bought it back on this day. And then it meanders higher. It still isn't an uptrend, obeying the 10-day moving average. But as you can see here, the last couple days here, the selling volume has been higher than a few weeks prior. So that's not a bad taking your profits point. Still, the stock's not doing anything particularly wrong, but there's nothing wrong with taking your profits the last couple of days on this one, because it has had a really nice move, and it is more, the odds are starting to tilt in its favor that it's going to start to have some sort of appreciable correction before, if and before it's going to go higher. Then we've got CI. This is one we put on the list on the 22nd of May. That was back in here, I think. Yeah, right in here, 22nd. And so then you had a very huge move here, and then you could call it a Bible gap up. So if you're in this, it's not doing anything wrong. If it undercuts the Bible gap up by 2 or 3%, then you probably should sell it. But right now it's looking pretty good. It might take some time to actually start to get going, because it's made a pretty good move in basically a month's time, and it's not known to be a fast stock. So that said, do keep your stops tight on this. It could be that the pattern is going to finally come to a rest and start to move sideways or meander higher. So in other words, most of the gains in the stock have probably been had. Then we've got Stpn. This was put on the list a day before we put CI on the list. This was on the 21st, right here, when it had the pocket pivot on volume, and then it had another pocket pivot on the breakout. And again, we talked about this one when, first of all, it was getting ahead of itself actually on this day right here, and then the next day it went even higher, but on lower volume. Nothing wrong with selling it on that day. If you held it here, then at least I hope you sold it at the open, no questions asked. You don't know what it's going to do. Right now it looks like it's forming some sort of a wedging pattern that's very weak, so if you still have any shares in this, you should be selling it. Finally, we've got GoDaddy GDY. This is one we put on the list, and it seemed to get ahead of itself on this day here. That would be on the 19th with a close that was below, well, you should say in the lower half of its range. So there was nothing wrong with selling it on that day. Now it seems like it's trying to constructively consolidate. It's now trading about mid-bar. It's a great company, so if you still have any shares, maybe you're trading around a core position, nothing wrong with holding on to that core position, because the company looks pretty good. It is number one in its space in what it does. And with that, I will turn it over to Gil.
We have on the indexes Nasdaq at an all-time high on the breakout last Thursday, so a week ago, and we have the S&P still hovering along the 50-day moving average as it's still not making new highs, while the Nasdaq is. Interesting thing to me is that by the time this occurred last Thursday, a lot of the stocks that I owned, cyber, whoops, let me go over here to the things like cyber had already run up a fair amount, and now this is pulling back, coming into the 20-day moving average. I don't know if it becomes viable in here, but I'd definitely be watching it, or am watching it as it pulls in. Mobilize, another one. To me, this was a buy down here, right along the 50 days. So now you've run all the way up. You got a buy recommendation on the stock, so it's trying to move higher to a new high today. But I sell into this and just hang out and wait to see if another buy point shows up. When I get 15, 20, 25% in the stock in this market, I'm generally going to take it. I'm not going to argue and decide that I'm going to become a long-term holder. You know, like kind of like with Ambarella, when you had this move, I think when you got up here like this, and if you had hung on to it even above 110, I mean, if you had sold into the move into 110, say, you'd still be doing fine after this breakdown. But you know, when this thing's up here, people start talking about how great the company is, and somebody telling me they have the secret sauce and blah blah blah, and that's usually the time when things come down pretty hard, and maybe this thing is, has probably topped for good. Is your take on this, Dr. K, that the stock has topped?
Yes, it's put in at least an intermediate term top.
Okay, and you know, there's an easy way to handle this because we were talking about this last week, and it wasn't clear necessarily that it was a climax top per se. And there's a very simple way still to handle it. You don't have to worry about whether it's a climax top or not. What you do is you simply watch the stock, and as it's running along the 10-day line, what we've seen in the past, you can look at, say, Qualcomm back in late 99 and early 2000. Stock had a move initially in November of 2000, or I'm sorry, November of 1999, that looked like a climax top. And not on, you know, the stock jacked up pretty good, not unlike Umbrella here, and then it held tight along the 10-day line. Then it had another move that was a climax top in March of 2000. So the bottom line is trying to slap a label on it and say, yeah, this is a climax top, it's topped, it hasn't, it has, it hasn't, you know, and you can get into that argument in your head if you want to. But I think the bottom line is when you have an extended stock like this, sell into the move and then look to buy back on either a new setup or some sort of constructive weakness. And that's just the method I've used over and over again. And what happens is that even as the Nasdaq has moved to new highs, I'm actually being pushed out of my positions by taking profits into extended upside moves. So the market is naturally pushing me into cash. And what we've seen over and over again in this market is that as we make a marginal new high, oftentimes it comes in. And I think this is what creates the whole, here you see the same thing here with the S&P. And here's another, you know, marginal new high, and then it comes in here, and so on, and it just keeps doing this as it chops around. And so I think a lot of this sort of index action is exemplified by the action in individual stocks, which will have nice moves, and then the moves will give way and the stocks will come in hard, and then you're looking for a spot to come back into them. So this active approach of taking profits into extended upside moves while looking to buy on constructive weakness that for the most part the crowd doesn't see. So I was actually advocating buying this one when it was quiet along the 50-day moving average in here, and the volume is drying up, and that's very nice tight action. That's the sort of voodoo action, volume dry up action that you want to see, and you buy into that. And I know some people did that, and they're sitting pretty on this move, and you're even, if you bought down there, you're still in a reasonable position to sell and take a profit. But it looks to me like this is done. You know you're going to get a snapback move at some point, but if you thought that was going to occur at 115, you're sorely mistaken. If you thought it was going to occur at 108, you're sorely mistaken. And now we're up into the 20-day. This looks to me like it's probably just going to roll back down to the 50-day. And of course, you know, Kramer comes out and defends the stock, and there's an article today about don't short Umbrella, blah, 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 blah. You know, it's a bunch of baloney and just a bunch of noise. So I think if you're operating on the basis of this particular method that I like to employ, I think you naturally come into stocks when the market's weak and you're seeing the proper setups. And then as the market turns back to the upside, like this on the Nasdaq, you're getting these nice moves in these stocks: Cyber, Umbrella, FireEye, Sedge, SolarEdge, Facebook, etc. Even Second Sight Medical was having a nice move, and then it topped the other day. Well, short term, hit a peak on this gap up on news, and to me that was something you sell into. And I was actually tweeting about that you could sell into this. And then what you can do is once you sell into a gap up move like that on news, you can look at possibly re-entering on a 620 buy signal, you know, on an intraday basis. And sometimes I'll do that, and in this case, highs did not get any lift, and now we're kind of pulling in, and this is not what I would call a constructive pullback, because right now the volume rate is running, well, it's already about average for the day, and you're still early in the day. You're not even halfway through the day, so this doesn't look right. But again, you know, buy when it pulls in here, and then sell it when it runs up. Buy it in here, sell it again, and I trade these things around like that, and it works pretty well. Not that this has been like an easy year. It's been a very tough year, and I think a lot of the orthodox sort of buy setups just don't work. Facebook was a great one. I was talking about it last week on the pullback into the 10-day. Come on, Facebook. Where are you? There you are, right here. And you had this pocket pivot, and what I was talking about is you have one pocket pivot here, second pocket pivot here, third pocket pivot here. The first two don't work, and then the third one may have the crowd condition to think it's not going to work, so you invoke the rule of three here. So the rule of three is essentially the idea that by the time something happens for a third time, it's become what it's done the prior 2 times a little too obvious to the crowd, and it'll fake everyone out, and instead of pulling back as these two did, it turns and goes higher, and now you get a breakout. And but I sell into that move, and I might sell here at 87 and change. And of course, I guarantee if you sell into strength, it's always going to go a buck or two past where you sell it. That's just the way it works. But I'd rather be doing that than scrambling to sell a big gap down like Umbrella had. So you're proactive, but you're not getting nitpicky about whether you get the full move or whether you sell into this move and on the breakout, because the breakout's now obvious. And to me, this looks like money is just pouring into Facebook. Here we see the weekly chart. And a lot of managers are probably behind their bogey for the year, and I know a lot of people have had trouble this year, so a lot of money managers lagging, and so they're all piling to Facebook here. And I think on the premise that you really can't get fired for buying Facebook. So you got to remember the whole money management game, the whole professional money management game is all about beating your bogeys. And that's how money managers keep their jobs. As long as they can match their bogey or do better, they're doing fine. So they'll do whatever they have to get in line with their bogey. And even if the market goes down, if they go down in line with the market, in other words, the same amount that the market goes down, or even a little bit better, they don't go down as much, maybe they move into some defensive names to kind of cushion themselves, they're looking pretty. And that's really what the whole game is all about, relative performance. So a lot of times I think you see stocks getting a lot of push because money managers are either lagging behind their bogey, and they're looking to just pile into something. So now I'd watch this how it acts as it comes into the 86 level with the 10-day moving average coming up. That might serve as an area of support on a pullback. Let's see, we talked about Mobileye. So you look at these names like Netflix, Eyes, Umbrella. Netflix yesterday failed at the 700 level. So what does that become? That becomes the Livermore Century rule in reverse, where you short on the basis of the failure at the century mark. And I shared this one yesterday, and been working on the short side. It's coming lower through the 10-day line. Now probably going to get to the 20-day before you see some kind of a little bounce. But you see the big reversal, and I have to admit, sometimes I really wonder what's going on in people's minds when they ask me questions like somebody's asking me, oh, now that Netflix is splitting 7 for 1, if it gets to $100, would that be a century mark buy? And they're sort of trying to project into the future what if it does this or that. But the bottom line is you're missing what it was doing yesterday, and yesterday it was failing at the 700 level. Now you could have treated it initially as a viable gap up, and the intraday low early in the day was like 687. But in my view, once it couldn't hold that thing was probably a short on the basis of the Livermore century mark rule in reverse. So yeah, I know Icon sold Netflix, but that really doesn't matter to me. I watch what the stock's doing. So he sold a lot of it down at 350, which that didn't mean anything. So it may not mean anything here either. It did provide an excuse, they say, for the stock to reverse. But I got to think this kind of volume, people are taking profits, and everything looks rosy. The 7 for 1 split could also be seen as excessive. There's the idea of having a large number of splits. So you have a 2 for 1, and then 2 months later another 2 for 1, and then 2 months later a 3 for 1. But if you have one big 7 for 1, that kind of takes the place of 3 or 4 splits in and of itself. And I think that could be seen as excessive. And the stock somewhat extended, and we started looking at it down in here when it was pocket pivoting right here. So it's had an extended move. But you're seeing some of this action, and I gotta wonder if some of it isn't topping action. And if it is, usually if the market's going to top, you'll see associated action in leading stocks. And so I'm sort of keeping an eye on this too, because the situation is fluid. And I think that some of this could be telling you we're in a position where we may correct more. And as we know, every time the market has made a marginal high, I don't care whether it's the Nasdaq or the S&P, whatever. It comes in, and so the expectation here is that we're going to take off and rally. I don't know. Again, I think you can sort of take all of that thinking off the table simply by operating according to the way that we've been talking about, which is to buy constructive weakness and sell into extended strength without any particular bearish or bullish bias. Just play it as it lies and see where things go from there. So, you know, keep your stops tight so that you limit your risk. And that's really, I think, the only way you can operate in this market. It's not possible to start building big positions. You know, somebody today asked me a question about Silicon Motion and that they're up 10% on the stock and they want my opinion on the stock. Well, my first answer is I don't have an opinion. I don't operate on the basis of opinions, and I don't give people opinions unless they demonstrate to me that they can think for themselves. And somebody's asking me what my opinion is of the stock is kind of dumb, because if they can't see what's happening, then they really shouldn't be investing, because it's pretty obvious, holding the 10-day line. If you bought it, maybe say on this pullback, which would have been fortuitous because it jacked immediately, and you get a 10%, you know, this person is looking to add to the position, and I don't know if I'd be averaging up in this market. It's not something I do at all. I sell into extended things. So if I bought down here, I might be looking at dumping this thing up here if I'm up 10%. If it goes up a little more, maybe for sure, and if it breaks the 10-day, maybe I'm out and bagging this profit. That's how I approach this market. And I don't think that you can get a lot of traction trying to play for big moves, because they're far and few between, and you really don't know when you have something that's going to be able to sustain a move in this market, because it's just not the high probability play. The better play, I think, and much more high probability, is buying when they're quiet and nobody sees the buy point, and then selling into the extended strength when the stock becomes obvious to everybody. So, you know, that's the way I operate. So somebody's asking about Zebra. I like Zebra, but I sold that. This move here was sellable, I think. Now you're coming into the 20-day. And maybe it should, see if it holds. The volume's drying up a little bit today, so maybe that's going to hold at the 20-day. That might be a buy spot, and at least you could set a stop at the 20-day moving average to keep things tight. So Tesla's moving higher. It had a pocket pivot last week here, and then you pull right into the 10-day, so that becomes viable there, and that's pretty decent action because it closes off the lows and you get some volume in there. So that, I would call that supporting action at the 10-day line. And then the next day you're moving higher, and you're moving higher again today. And they're just crushing the shorts on this one, which is kind of funny to watch. But, you know, I've been bullish on it since 203, and to me it's getting long in the tooth now. And maybe as we approach earnings, I think, in early August or July, something like that, maybe you want to take profits if you've owned this thing the whole way. But the last time I thought it was viable was on this pullback here. You can see it's a voodoo pullback to the 20-day. And it's failing after this pocket pivot. So again, the strength, you don't want to buy the strength. You look for the strength as a flag that this thing might have something going for it. And then you look to buy the weakness. So you could have, you know, even bought along the 10-day line. You've been okay. And then when it holds the 20-day, I thought that was viable. And then you get the nice jack. You could take a profit, or if you have it now, you could sell it. So let's see, GoGo. I'm going through my list here. GoGo's back, trying to get to the top of this range. It can't seem to break out, but it does seem like you trade it and buy it when it comes down to this level, like it did yesterday on light volume. And so that's a good, you know, low volume pullback. And now you're up. You probably got somebody out there pumping the stock, but I'm not really sure. I haven't checked the news on that. So, but it's not really going anywhere. And my thinking is if it wants to go anywhere, it's probably having a hard time because the airlines have been getting smacked. And that may put a lid on it. You know, this is what Delta, this almost looks like a short now in the rally back up into the 200-day moving average. This is the red line. That's the 200-day. I know I've got a bunch of lines on here, but the red is the 200-day. The blue is a 50, and the black is a 65-day exponential. The green is a 20-day exponential, and the red, or the magenta rather, is a 10-day simple. So only the 65 and the 20 are exponential. But you can see this is looking a little shortable perhaps up here. Love, Southwest Airlines is still looking ugly. Save, it got back above its 20 days, trying to hang along the line, but it's still basically in a bear sort of flag formation. See other airlines, AAL, American, similar sort of position as Love. So that, you know, the airlines are all weak, and I think that's put a lid on GoGo. This name has been okay. Paycom, they had a pocket pivot here, but now you're back to the 20-day. Does it become viable here? Maybe, if the market can turn. Definitely got an eye on this one as well today. So there's a bunch of them I'm watching. FireEye, Fortinet got downgraded by a couple of firms. I think UBS was one of them, and they're, you know, citing the usual valuation issues and whatnot. But to me, all that's just noise. But they whacked the stock pretty good. You got two gap downs in the pattern on pretty decent volume, and now it's floating along the 20-day exponential. Remember, this was probably buyable in here, and this is where I liked it, was down in here. And then even once it got up in here, I'm selling it. And of course, it's going to go a little higher. But now you're pulling in and wait for it to set up in here. Maybe it does, maybe it doesn't. But in any case, I think it's correcting, and it needed to. It got pretty extended. This is your standard base breaker right here, which actually would have worked. But now you're coming in, and we'll see how it acts along the 20-day or wherever it finds support as it pulls back. So far, I'm not getting any sense that I want to be stepping into this just yet. Salesforce, here's a good example of one, sort of an ugly duckling pullback on low volume into the 50-day moving average. You could have closed your eyes and held your nose and bought it there, and it would jack up. Now this, believe it or not, this close was an all-time closing high for Salesforce. But so you could consider that to be sort of a trend line breakout if you drew a line across these tops. Trend line based breakout. Now that's failing, and it's sort of sputtering out in here. So I'm not sure what to make of this. Maybe it got to the 50-day again on light volume. I might hold my nose and step in and buy it, but right now I'm not so sure. Anyways, getting back to the cybersecurity names like Fortinet got whacked yesterday. And of course, here you go, you get extended on the upside. This thing's been slowly trying to go higher. Now you get extended to the upside, it gets whacked. So if you're sitting up here and you bought it down here around 38, 39, you know, when it was real tight and quiet, and you've been watching it go higher and higher. Now you're up here, you're up 15% or something like that. And you can consider taking at least partial profits because it's an extended position here. And then, of course, you get the gap. And they take away a good chunk of that in one day. And now it's not really getting much support. It tried to hold the 20-day line, but it's, you know, it's kind of floundering a little bit in here. So market's kind of floundering too. I'm seeing the Dow up 5. So I guess everything depends on, Dr. K, does everything depend on what happens to Greece? Is that what it's all about right now, or do you think there's something else brewing below the surface of this market?
Well, I think the market's shown a lot of resilience with regard to Greece. Greece has had some scares regarding its debt settlement, and the market seems to shrug off the news because it's kind of a broken record. And if they can't resolve this issue, that might cause some temporary weakness in the markets, but it actually might also cause some bullishness because this Greek issue is finally put to bed. And I suppose the discussion would be, well, what's the next domino to fall and leave the EU, and then discussions about the vulnerability of the euro in general and its sustainability going forward. I mean, we've had a lot of people who have been following this very closely over the years, and they've given a lifetime expectancy on the euro of, you know, anywhere between a year to 5 years, 6 years. So, you know, that could cause some volatility in the markets as well. So, you know, again, this is all trying to forecast stuff, and we don't operate in the future, we operate in the present. So.
Right. And I think it becomes a lot of noise, but, you know, an alibi to sell, and then they make everybody think that that's the reason for the market selling off. And then what happens is if they hit the market hard here, and then you see some sort of settlement come out, and then they might use that as an excuse to rally the market and sell into it again. So you sort of have to watch the news from both sides. It can pan out in various ways, but again, I think it all boils down, and I think it's quite simplified. The whole process is quite simplified by this idea of looking to buy the quiet, constructive weakness as things are setting up tight or pulling back on very light volume, and then selling into extended strength. If you just do that, you're just consistently and naturally raising cash when things get frothy, and looking to buy with your cash when things come in and start to quiet down, and the crowd doesn't really see the buy points. So, you know, that's the best way to operate. So anyways, so just continue with more of the cybersecurity names. Again, I talked about cyber, but you're coming into the 20-day, maybe this is a buy point. I think the one thing this has going for it, to me, this is sort of your do or die point. It could conceivably come down to the 50-day down at 65.25, but right here at the 20-day, you could try out a position, use that as a quick stop, and at least you're limiting your risk. Palo Alto also got hit yesterday. These charts are taking a little time to come up. Here we go. But it's trying to hold the 10-day. Of course, again, if you bought down in here, it's kind of extended. So, you know, you could think about taking profits and then just letting it figure out what it wants to do next. Twitter, I think, is a short. Although you're going to get this news from time to time that they're going to get bought out. On this day, I think it was this day or this day, either 3 days ago on the chart here or 5 days ago, they announced that they're engaging someone to help them find a buyer. And of course, they announced that if they didn't find a buyer, they would go it alone, which is kind of like a duh moment, because I'm sure they wouldn't fold up their business just because they don't find someone to buy them right here, right now. I think if someone wants to buy them, they should wait, because they'll get it a lot cheaper if they wait. I think the stock's probably headed lower. It's been finding support along these lows here on this big cup, and resistance at the 20-day. So I view this as a short. If you see any rallies up to the 20-day, those are juiciest, but it may just hang out along the 10-day and then break to the downside. So that then brings into question LinkedIn. Now you're seeing Facebook jacking to the upside, but I notice you don't see Twitter or LinkedIn getting any kind of play on that, any sympathy play on it. So what you notice now is that the 50-day line, which has been dropping for a while, is now meeting up with the stock, and it's at 217, which in my view would be a nice spot for a short, and it's trading there right now. Use that as a quick stop out. Now wait, the 50-day is at 217.35. You're trading at 217.11 on the offer, so 217.02 bid right now. I'm thinking about maybe I should test this out. On the other hand, if you saw a move through, the volume is very light, so you could also set up for a pocket pivot up through the 50-day. So that's a possibility too. I think you kind of have to be, if you're going to short it here, you want to have the market on your side, so you want to see the market breaking down. So I might just wait to see if the market does get into trouble, then maybe you can hit this real quick and you might get a downside break. Otherwise, it is also set up for a bottom fishing pocket pivot. So it's kind of, in the do or die position, and we'll see what happens. Sedge, good old Sedge. Now, I look at Sedge on a weekly chart. Now, what you can see here is it's kind of in this ascending pattern. You have one move, here's a pullback, and then a move to new highs, and a pullback back into the structure, then a move to new highs, and another pullback. So it's acting kind of like an ascending flag, or the old ascending base, which I won't get hung up on that too much. I just pay attention to the action on the daily chart. So we know, this is a consolidation of sorts, and I've been thinking this thing needs to build a base and that it would go sideways, but it can fake you out and decide to do it a different way, which is go into an ascending formation, which is what it looks like it's done here. And now you're pulling into the 10-day volume is drying up, so it's hanging along here. It got support on Tuesday at the 20-day, trading about average volume. Then you picked up yesterday, but you're stalling around in here, so it's trying to hold in tight. I think if you got a chance to buy it at the 20-day, that might be your best shot, because if it is forming this ascending pattern, I think it should hold somewhere around the 38 level at least, and so that becomes a reasonable guide for a downside stop that you can, where you can keep things pretty tight. So, software or Skyworks Solutions, the stock that I continuously refer to as Software Toolworks, but Skyworks Solutions. Pull back all the way to the 50. There's your hold your nose and close your eyes buy point right there. Stock moves up, and now you're trying to go to new highs. It's floundering about. I don't really see it in any low risk position here. So that's a little bit of a contrast to NXP Semiconductors, which was looking similar to Skyworks back in here when it was holding along its moving averages, and I thought it was viable there. And of course, you run up 10% or so before you flop out. Now it's kind of hanging along the 50-day. Now the volume is drying up, so does this thing become viable, or are we on the verge of failure? That's a tough one to answer, and I'm not really sure what it's going to do from here, and I'm not really sure I'd want to be buying it, because I would think if Skyworks Solutions has sort of decoupled when they were looking the same, and they both pulled back at the same time, because if you look at this point right here, NXPI was coming in at around the same time, and it hasn't been able to get up, whereas Skyworks has. So it's kind of tough to figure out what this turkey's doing at this point. Kind of forgot about Vasco data on the cybersecurity stocks. This one was viable along here when it was quiet, and then you had a pocket pivot here, and it's continued higher. So this is an extended name. This has had a pretty nice run from here. And now you get into, I think, up in here, and now you're looking, this is your base breakout, and I think you're a little bit too late there. So I'm more inclined to sell into this move and then let it set up again. Jose Cuervo, or Cuervo Inc., which I like to refer to as Jose for short. Probably buyable best along here, and it's kind of up there. So, not really want to be buying in here. Data. I'm actually experimenting with this one today on the short side. So I shorted it above the 10-day line this morning. It's coming in a little bit. It's my umbrella theory that maybe this thing will come hammering down. Could be wishful thinking, but I'm thinking at least a test of the 20-day moving average looks logical. So you're seeing some pickup in selling, but I think this one probably needs to come in and set up along here. It's pretty extended. UA, this one's acted pretty well. I think we put out a pocket pivot alert here, and the stock went tight, volume dried up. So here's your spot to come in after it. Now it's moving up a little bit, not a lot, but a little, and looks okay for now. So I think at least if you bought down here, your risk is pretty well controlled at that point. Taser, someone's asking about Taser. That's also on my watch list. You're pulling into the 20-day volume is drying up. But again, it's had a big move, so it may need more time to consolidate if it's going to go higher. So I'm looking at the Dow up 2, Nasdaq's up 5 right now. Kind of everything's kind of coming in, looking kind of cheesy actually. Baba's done. Bye bye Baba. I don't know what the deal is here. It was looking very promising here, got a lot of nice volume, and then suddenly nobody's interested in the stock, and there's really not a lot of heavy volume in here either way. A little more on the sell side, but it's just drifted down. Nobody wants to buy it. And I think what they're thinking about are these 380 million or 390 million shares that are coming loose from Yahoo. But Yahoo's structuring that spin-off of those 380 million shares through a holding company or some sort that's going to trade on its own. But I still think that puts a big supply, a large amount of supply into the market, and that may be what the issue is here. Because if you want, if you buy this separate holding company that Yahoo is going to take public, that owns the Baba stake that Yahoo had, it basically becomes a proxy for the stock and will absorb demand for Baba as well. So I think that may be the problem here as this thing pulls back. In Trexon, I've liked in Trexon, but again, this is where it was buyable down here. And now you've run up from about 41 to 51, and what is that? That's a 20% move. Take it. Thank you. Here's the base breakout. Doesn't work. So again, the place to buy it is here. It runs up 15, 20%. Take your profit, and it breaks out. So all the IB dweebs are buying it, as they've been indoctrinated and trained and brainwashed to do, and now it comes right back in. Chris, you talked about GoDaddy, right? I mean, to me, GoDaddy was buyable down here. Buy it when it's quiet. Now it's run all the way up here. To me, I sell this thing and look for it to form a base. I'm not interested in it up here. GoPro, I think GoPro's another situation like that. You could have bought it in here along the 20-day. Nice jack to the upside, definitely more than 20%. And then it runs out of gas along the 200-day. I think it's interesting. I start getting emails and questions from people. They want to buy it here at the 200-day, but it's already done this. And now you want to buy it here, and you're trying to look at any little pullback as constructive weakness to buy into. I can tell you that this idea of buying into constructive weakness, it works better when the stock has been quiet. Once something has been running up for a while, it's become obvious, and everybody's looking to buy any pullback, and a lot of times that's too obvious. So I think, this thing, resistance on the rally back up to the 200-day here, and now you break with Amberell and you're wedging back into the 10-day. I'm not buying this one. At best, this thing needs more time to consolidate, and at worst, this is what you got. This is from here to here, this move, and that's it. So I'm not a buyer. Oh, let's see here. LinkedIn is moving a little higher. I'm just watching this right now. Keep an eye on it. We'll look at it. Let's look at a 620 chart. For anybody who's new, again, the 620 chart is just a device that I use. There's no magic to it. It's not. These aren't mechanical buy or sell signals. It basically helps me time things on an intraday basis, and it is all derived initially from my currency trading. Just so you know, I use a 620 system to trade currencies on a 5-minute chart. which I use to distract myself when there isn't a lot to do in the markets and I don't want to overtrade or try and do something. So like right now, I'm trying to short the dollar against the yen, and that's sort of working a little bit. But I use this to kind of keep myself distracted. Well, after I've taken some profits, like in Facebook or Eyes or Zebra or Mobileye or any of those stocks, and now I just want to lay back and wait. And the way I make myself wait is by going and trading currencies. But in any case, the 620 was derived from that. And here you can see there's a buy signal here. You get a couple of false signals in here, and then finally a clean buy signal in here. And MACD turns with, so that looks pretty good. But now you're up there, so you're not really in a position where you want to try and short the stock. But again, you're using the orange line is a 6-period exponential. This is a 20. The blue is a 20-period exponential. And I set the MACD to 12.26.9, and I guess the C stands for close. I don't know. I don't really get hung up on the exact parameters or using this as a mechanical device. It is more of an interpretive device that kind of gives me a sense of where something is trading on an intraday basis. And remember, all of these techniques, everything that we use, it's more than just reading a book or reading a website and following some stupid rules. Okay, you really need screen time, and I like that terminology. That's what currency traders use. They call it screen time. If you're coming up with a system for trading currencies, it's one thing to have the system. The other thing that you have to do, you have to invest screen time, and that's watching how things act, looking at charts and studying how charts act in real time, and watching the quotes in real time and seeing how the market moves and everything works, and you start to develop your judgment, and that's how that works. And so with anything else, or as with anything else, the 620 chart is using it. It's an interpretive tool, device, whatever you want to call it. It's not a mechanical device. So but right now I'm not looking to short the stock. I might watch to see later on if you get some sort of 620 turn on the thing. I'll show you this. You can see here you get now you've seen a 620 breakdown in data. So I'm sort of testing this out. I have some theories about testing stocks near their peaks, and I've just been testing them. Maybe that's for the next book on shorting, but a lot of this stuff is new. I'm going to just see if it works. But you can see how this one's giving it to you. And you can see Apple. I think Apple's probably a short. You're starting to get a little bit breakdown. It's kind of peeling away from the 20-period line here. And I shorted this one too as well. You can see on the daily chart. Now, Apple is a big stock, and you might even consider it a barometer stock, although we've seen periods where Apple has decoupled from the market, as it did in early 2013, where it's going lower and the market's turning and going higher. But what I noticed here is it's stalling out yesterday on heavy volume. I thought it actually was a position early in the day, and the volume level was already showing up on HGS Investor software, which I use, was already extrapolating out to a pocket pivot. And in fact, we got the pocket pivot volume signature. The only problem is it stalled out, closing the lower half and below the 50-day. So this morning they gap it above the 50-day. I consider that a supreme gift. I short the stock. And I'm just kind of messing around with the short side here because I think we could come in a couple, 3%. I may be able to scalp some on the short side. If things get better than that, then maybe I'm in position to make better money if the thing breaks for the 200-day moving average. But it looks weak. But the other thing is that I don't consider Apple necessarily to be indicative of or a sign of what's going to happen with the rest of the market. I think if the general market breaks down, Apple will break down. So it may be, you know, which is leading which, the cart or the horse, and which is Apple, the horse, or is it the cart? Maybe it's the cart. So, but it's the cart that can be pulled very fast to the downside based on the weakness in the pattern, and you've seen a lot of selling volume in here. So, all right, let's go into biotech land, since some of you are asking about biotechs. GW Pharmaceuticals. Now we got into this one first here, I think here and here. So this thing's up there, you know. So to me, it's in profit land. So a lot of people ask about this one, and this one I call it Heinz P, but it's Horizon Pharmaceutical. It's had a good move. There's a viable gap up here. We were following this one a long time ago when it was going nowhere, if you guys all recall, and then it started going somewhere. Now it's up here. You know, I don't know, you're pulling back on top of this structure in the 10-day. It may be okay if you own it and you bought it lower. Maybe you're okay. But again, you can think about taking profits into extended upside moves. And that works in this market, you know, and I don't think it's 1999 all over again. In 1999, yeah, you had a huge amount of liquidity being pumped into the system, but that was all coming in at once, and you had a lot of good things going on in the economy. Here you have a crappy economy, a very sluggish economy. And I think what all the liquidity has served to do, rather than to create a parabolic upside move in the market like it did in 1999, it's actually just created this grinding, churning upside bull market that we've had since 2009. So, you know, I don't necessarily think that all this liquidity is like dry tinder that's going to catch fire and spark a parabolic move to the upside. There's too many other cross currents, and the global economy is way too weak in my view. Where are we? Let's go. Biogen. Okay, Biogen I thought was viable here, and now it's run up. You know, maybe now it's gotten above here, and now it's a short, and it's coming back in. But that was a decent trade from here if you saw that happening. Celgene, same thing. You had a pocket pivot here, and now it's sort of maybe now it becomes shortable as it runs into resistance. It still has this sort of rolling head and shoulder as well. It's like a pinhead here. Let's take look at Biogen on a weekly. Let's see. Yeah, there's a pinhead. I don't know. Maybe this thing's going to fail here. You're running into resistance along these lows or in this little area of congestion here. So these could become, could become shorts again. In Trexon, I talked about Amgen, Slamgen, as I like to call it. Again, sort of a head and shoulders thing. You run up in here into congestion, now you're coming in. Maybe this is a short using the 50-day moving average as a stop. Somebody's asking, I'm just going to diverge quickly here. Somebody's asking about BLK as a short. I guess, you know, but you're kind of late to the party here. It's just breaking the 200-day. I guess you want to short it here and use a 200-day at 354, a point higher as your stop. That might work, but you're kind of late in my view. You could have been shorted up here as you run into this area of resistance, and actually fails at the 65-day exponential and the 20-day exponential here. So I think you're a little late, but it does look ugly. So, you know, if you can sit through 5 points of upside back to the 20-day from here, I guess you could short it here, or you could just use the 200-day as a stop if you're expecting it to break to the downside. But on the weekly chart, it does look pretty ugly. So what is it, BlackRock? Yeah, investment company. I think this may be something to watch. So, I mean, all that's to say is I think you're more or less on the right track. It's just your positioning, I think, may not be optimal. And you can see here that this week you ran into the 10-week line. So you got to keep an eye on your weekly and your daily charts. And in this case, you would have seen the resistance up at the 10-week line. So you keep an eye on those. But I think you could be a little late. But like I said, if you wanted to come into it here, you could either use the high of the day here at 356.48 or the 200-day as a stop if you wanted to hit it here. But keep in mind that you're already down a fair amount off of here, the 65-day exponential and the 10-week line. Okay, let's see. Bluebird Bio. Keep thinking of that Paul McCartney song. I don't know why. Whenever I see this, it's driving me nuts. Sometimes it shows up in my dreams. Yes, I dream about stocks actually. Pulling into the 10-week line. So, but that's had a big move, you know. So maybe it's done. Probably coming down a little more. Acorn, everybody's asking. This one looked like it wanted to go higher, but it's failing. So, you know what? If you get a pocket pivot like that, this, and then it can't really hold the 10-day on the pullback or the top of this range, I don't mess with it. And I think I already wrote last week or earlier this week that I don't care much for this now. I just punt. Retrofin, great name, great name. But stock was viable here on the Bible gap up. It's run up and near the highs. But think about this: if you bought it here, so you bought it under 30, hopefully in here maybe 29 and change, and you run up to 34. What is that? It's about a 15-20% move somewhere in there. You could sell it and take profits and then let it settle in and see where it goes from here. Gilead's been making new highs, and it's just running higher. I'm just going through all my biotechs that I watch. AMAG, a little choppy and pulling in again. This one's acted okay, but I think I would have rather bought it in here somewhere because now it may be somewhat extended. If you think about it from here, if you bought it in here, say you're at least 20% extended now, or you got 20% extended. So it's getting into that zone where I'm thinking about selling it and taking profits. I'm noticing the U.S. dollar coming down just a pinch, couple 3 pips here. Amazon is, go through some of the big stock names on the Nasdaq. Come on, Amazon, what are you doing? I think my charting system needs coffee or something. A little bit slow. This thing is driving me nuts because it's just going sideways and going nowhere. So the idea then becomes to buy it when it pulls back to the lows of the range, or now you're looking probably at the 50-day moving average, and then hope it pops back up. But I'm not sure I'd be buying it up in here. I already looked at Apple. Baidu is a piece of garbage, and I think could be shortable in here. If we look at it here, you see the head and shoulders, and you're rallying up into this area of congestion. Didn't quite get to the 40-week line. It's kind of in between. But I think I would look at rallies from here to try and short if I was going to. But overall, it just looks kind of weak. Google's trying to turn here. You had a pocket pivot right here, and that was 6 days ago, and it's just kind of flopping around. But this is the overall pattern, which to me doesn't look all that constructive. So for all we know, this is a short point as it comes up, I don't know, into this lows here, across the highs here, a little congestion up at the peak. So I don't know, but it doesn't really thrill me. Netflix I looked at, it's still heading lower. Keep in mind it's down 20 bucks, but that's only 3%. That could go down a lot more, like 50 points, 60 points if it's topped. And I think you can make a reasonable case for some sort of top. You know, and the other thing that drives me bonkers is I was watching Fox Business, and Stuart Barney, my buddy Stuart Barney, I couldn't believe he was babbling something about how now people, a 7-for-1 split by Netflix is going to allow the average investor to buy the stock because it's cheaper. It's saying, no, it's not. It's still all about percentage moves, okay? If you buy $20,000 worth of a stock and it goes up 10%, you make $2,000. It doesn't matter how many shares you buy. So this whole idea that it's going to help out the smaller investors, such a pile of garbage, it makes me ill. And especially from Stuart, who should know better, having graduated from the London School of Economics. Hey, Dr. K, is the London School of Economics reputable, or is it just a hack factory?
No, it's one of the best in the world. I mean, you could put it right up there against Wharton. I would say Wharton is better, but I mean, you're splitting hairs here because they're both top level universities when it comes to economics and finance.
I guess they just don't teach common sense.
Better, actually, what she should have done is qualified it by saying the average investor will now think it's because it's cheaper, then they can buy more shares, but that's no reason to be buying a stock. You buy stock because of quality, not because of the price.
Right, although people seem to get hung up on that. Yeah, and that would be the average dumb investor, as opposed to the average smart investor who understands that it's all about percentages. Anyways, somebody asking about Zeltiq. There's no pocket pivot. There's nothing in here. I'm not a buyer here. I know it's back above the 50-day, but I'm not going to buy it in this position. So Avago is another one of these semiconductors that's kind of floundering about. Now, you've seen volume join up, and you would think that, you know, it would set up in here and go, but it's not so far. And I think probably if you were going to buy it, it was down in here. I think there's a pocket pivot right there as it's turning off the lows of the base. And then you would be up a pretty decent amount there on the run-up, and then you could sell that, and now it's trying to set up. But I don't really see anything here that makes me think I want to stick my neck out on the long side of this thing right now. I tell you the truth, I don't really feel like buying anything on the long side here. You know, Mobileye's nice to have today, and Tesla's nice, but I think I would be selling those moves, frankly. GoGo's looking okay too. It's moving up. Somebody said that airlines are thinking about offering their own free Wi-Fi, but whose system are they using? Are they using Panasonic's? Are they using GoGo's? Are they using Ent's? Remember Ent? What is that, Eagle Entertainment? I don't know. But GoGo's actually moving pretty nice today. It's one of the top performers on my buy watch list. In fact, the #1 performer on my buy watch list this morning. Mobileye is #2, followed by the Shake Shack, which is kind of a dog. And Sleepy Charts, that's what they are today. That thing's a piece of garbage. Look at how it seemed like it was drying up in here and setting up along 10 and then boom. But again, I would make the point that you don't just look at every low volume pullback as an automatic buy and it's going to work. You know, people get hung up on that, and it just proves to me the thing that I like to say all the time is that a little knowledge can be a dangerous thing. and people just want to apply rote rules. But it is contextual in that you're better off when you have the voodoo pullback here in a consolidation like this. Boom, that's a good spot to buy. When you start getting them in here, maybe this one works because it's still early, but maybe not. But it did, and now at this point, everybody sees this, and somehow, and I never really understand what goes on in people's heads, because once they see a move like this, they think that the stock is going to do it again, and it has some sort of God-given right to do it again, but they don't understand that that is probably a climactic sort of move. And everybody sees it, but it's always amazing to me that when people see this really strong move in a stock and then it starts to pull back, they want to buy it thinking that it's going to do the exact same thing again. And like I've said many times, Cinderella generally only comes once. She might come twice because she has one other shoe, but by the third time, she's run out of shoes. And I don't see this expectation that you're going to get the same kind of exciting performance again. It seems like silly, but someone's asking 620 on eyes. You have to ask me, do you see a 620? There's no cross here. It's just bouncing. And within the context of what's going on in the chart today, again, you know, it's not the 620 chart isn't some magic buy signal. So if you see a 620 turn in eyes, does it mean I want to see it? I want to jump all over it? Not really. Does it mean you could buy it here and then use the 20-period line or something as a stop? I guess you could once you see the cross if you're going to operate on that basis. But I don't, you know, given the fact that you're down on what's going to be higher volume and it may be twice this amount by the end of the day, that doesn't look like a constructive pullback to me. So contextually, I would be using the 620 chart more on a low volume pullback. So let's look at, say, Cyber Arc. Here you have a 620 turn, and if we look at the daily chart, what's the volume looking like? It looks like it's pretty light, but it could, for this time of the day, we're a little over halfway through the day. It might be there. So, you know, but in that context, that's a little bit better usage of the chart, okay? You're not just, oh, it's a 620 turn and I'm going to buy it because it means it's going to go higher. Now, this may not work either. So the volume is questionable in terms of being whether it's going to be higher or lower. It could pick up towards the end of the day and the thing goes through. But on an intraday basis, this might be more what you're looking for, okay? Learning the context is the art of how to interpret the price and volumes. Well, putting it all within context of the position of the stock within the daily chart and whatnot. So, you know, the same thing goes with LinkedIn as on the short side, which is it's pushing up into the 50-day, but so far, and so therefore it is on light volume, it is in position to fizzle out and find resistance and go lower. So on that basis, I would be looking for a 620 sell signal. Because of the position, we're in the right position for a turn, and I'm using this to time the turn on an intraday basis. Okay, just like some of the shorts I put out earlier. Actually, I have two, so Apple and data. So anyways, we'll see. And watching LinkedIn as it trades up on this and not really getting it yet. We may be getting close because you notice a couple of things here. Sometimes this can be a sign. You see how the MACD lines are higher here than they are here as the stock has gone higher, and now you're somewhat extended. You're getting a stretch on the lines here. They could start to cross. So that may be a spot to step in on the short side. So, and you could maybe test a little position. So let's see if any of you start doing it. Let's see if anybody starts hitting the bid here. 21739 on the bid. Let's see. It is 9:59. I think we're done. I don't have a lot to say other than got a couple of short sale targets if things start to get out of control. I can't say one way or another that we're going to go into a deep correction, maybe if there's no Greece solution. In other words, they don't agree to loan Greece more money so Greece can pay back all the money they already owned from the prior loans. I guess maybe that sends the markets lower, and everything just becomes a tactical short rather than strategic until we can determine that we're in a more concerted top. So, Dr. K, you have anything to add to today's brilliant insights?
I think it's all been said. We just have to remain in the present and see what the news doles out, see how stocks and the general markets react to it, and act accordingly.
Yeah, and again, I think that if you're operating on the basis of this idea of buying constructive weakness and selling into extended strength, the market's naturally, getting you in when you need to get in and then taking you out as you take profits when the getting's good, rather than sitting around trying to average up and hoping that you're going into an extended longer trend or upside trend rather, when you may not. And that's been typical of this market. When it makes marginal new highs, we see the market come back in. Welcome to the age of QE. Anyways, that's all we got. Merkel says Greece must have a deal by market open on Monday. They keep pushing things around. It's like they must have a deal by Wednesday and Tuesday and then next week and the end of the month. It's all BS. Just watch your stocks, I think. And if you're operating on the basis of this strategy of buying constructive weakness, selling extended strength, I think you're in sync with the market rhythm. And we'll see where we go from here. So stay tuned, you guys. We'll talk to you later. Take care. Have a great weekend. Ciao.
So long, everyone.